Good day, ladies and gentlemen. How are we all doing? I hope we are all good. So today we are going to be talking about the moving average. We're going to be talking about the 200 EMA. If you've noticed, it's one of the moving averages I use on my charts. So I'm just going to quickly touch on the moving averages which I use. So on my charts, I've got the 13, I've got the 50, I've got the 200, and I've got the 800. So the 13, you'll find out that it's the red one. The 50 is the aqua. The 200 is the black one. And the 800 is the navy blue one. Okay, so these are the moving averages. Then I got the TDI. So today I'm just touching on the 200 EMA, which is this black moving average, which you see on my charts. And I'm just going to put the significance on the H1. And this is mainly for day traders. This is for day traders, those trading like within sessions, London session, New York session, Asian session. This is for day traders. So you might ask, what is 200 EMA? So a 200 EMA, this is a trend indicator basically. Okay, yeah. So the 200 EMA, the E stands for exponential, right? So the 200 EMA or exponential moving average is a widely used technical indicator in trading, calculated by giving more weight to recent price data. It helps identify the long-term trend, potential areas of support and resistance, and it provides signals and entries. Basically, this is a trend indicator. So just to keep it simple, if your price is trading below the 200 EMA, if we're trading below the 200 EMA, anytime you see price trading below, it means for the most part, price is in a down move. So we're looking for sells. If we're trading above the 200 EMA, it means for the most part, price is bullish and we are only looking for bullish or for buy signals or buy setups. All right. So when the price is above the 200, it indicates long-term uptrend. When the price is below, it indicates a long-term downtrend. It can also work as a dynamic support and resistance. So most people don't know how moving averages work. So let's say you're using a moving average, no matter what value, and you see your moving average going like this, then you see your price pushing up like this. Let's say something like this. So it simply means this moving average is acting as a dynamic support zone. So instead of having a fixed support zone where your price is just like let's say this is a support zone. Let's say we had a bit of an OB right there, and price pushes up, touches, pushes up, touches, right? So this is a fixed support zone. But if you're using a moving average, it's a dynamic support zone. That means, for example, you see here where the 200 moving average is slanting down, it's acting as a dynamic resistance. Each time price is reaching near the 200, it's being repelled and it's going the other way, all the way, all the way, all the way until today, where I actually want to emphasize the setup which I took. So moving averages, they work as dynamic support, and this applies for all moving averages. It just depends with the time frame you're on and how you understand your entry and exits, of course, and other confluences as well. So how to use the 200 EMA on the H1 time frame, that's the main thing I want to talk about. So the first thing is you want to identify the trend. For the uptrend, we look for long trades when the price is above the 200 EMA, like I said, and the EMA has to be sloping upward. So I'm going to scroll a little bit back, where we have something like a clear uptrend. So you can see for the most part, EU has been selling. So you will see for the most part price. Okay, let's just use this one. All right, so for this price range, this is in September. You can see price is slanting upwards. That means for the most part, we are looking for longs. Each time price comes close to that 200 EMA, we're looking for longs. This is just like a general overview. Of course, you need to refine your entries using other confluences. Then for a downtrend, we look for short trades when the price is trading below the 200 EMA, which is what we've which is what we are looking at right now. From the past week up until this week, you can see prices trading below the 200, and this is H1. So that means we're looking for sales. So if, for example, if price retests the 200, right? If we retest the 200, we're looking to go short. That's the summary of the whole thing. Each time price retraces back towards the 200 and gives any confluence for a sell, we're actually supposed to look for a sell setup. All right, so exit and entry signals are breakout strategy. When the price crosses above the 200 EMA, consider a buy. For example, right here, you can see here we were trading below, trading below. So the first close above was here. But did we have any confluence on the left showing us a buy? No, we didn't. If you notice, we had a gray zone here. I'm going to touch into it much. This is actually a resistance zone. So until we came back above again, then we broke a zone. So now we're looking for buys, right? Price comes back towards the 200, repels on the 200, we look for buys. Same applies for sales. As soon as we close below, we want to look for more confluences. Is our price showing us that it's in a downtrend first of all? Okay, we're trading below the 200 EMA. Do we have an entry? We're now looking for confluences, nameable candles near the 200 EMA so that we can actually take the sell. And like I say, this applies for all moving averages. If you're using the 50 EMA, 20 EMA, 18 EMA, it's more or less the same thing. It all depends with your time frame of entry and your time frame of analysis. All right, so you also need candlestick patterns. For candlestick patterns, I would advise you guys to go through the Candlestick Trading Bible. Of course, some of the videos we went through that book here on the channel. So you need candles which are familiar, candles which you know, like your dojis, your pin bars, your bearish engulfings, if you are looking for sell. Right, so today I'll just quickly try to touch on today and I'm going to zoom in. So these are period separators. This was the weekend. This is Monday. This is Tuesday. This is Wednesday. This is tomorrow, Thursday. All right, so for today, what were we looking at? If you notice, our price is trading below the 200 EMA. That's the first thing. So we are in a downtrend. That's the first thing. Second thing, we are looking for a nameable candle rejecting off the 200 EMA. So the first thing you notice today is we had this nice bearish engulfing candle there. So I'm going to zoom in on today's price action so that you guys can see. So we had this nice bearish engulfing candle rejecting off the 200 EMA. So now we've got confluences, and in general, this price has been in a downtrend. So you might maybe want to take a glance at the daily chart just to see how the past few days have been going. So as much as we've been sort of sideways, in general, this price has been sort of pushing down. So that gives us a bearish bias, then confirmed by this bearish engulfing. So now we are lining up confluences. Once you get a confirming candle, you now need confluences for your sell. So since this was the high of the day, which is the HOD or the peak, what do we have on the left? We do have an order block right there. Or you can use this whole zone because all these candles are almost equal. So this bearish engulfing came and closed or broke below the order block. So now we've got a broken order block, which we call a breaker. So this is a breaker. So now we have a confluence, right? As soon as the confluences line up, we get our breaker. Now we come into the sessions. So I'm going to try to switch to trading view so that we can go into the sessions, right? Here's my trading view here. Okay, just a moment, guys. Let me just try to quickly locate it. All right, so on trading view, I switched to trading view so that I can show you the sessions. I'm a day trader, so I mainly trade New York session. So you see this is the price action we're talking about. Unfortunately, here there's no 200 EMA, but you can see the price action, right? So what happened today is you can see I had two views. Initially, price came tapped into the order block. So for those who don't wait for more confirmations, you can still sell the retest, put your stop loss above the last bearish engulfing like here, map 1:2 or target yesterday's low as your TP, right? So entry, TP, risk to reward 1:2. This also played out. But for those trading within the sessions, if you're waiting for New York like I did, this was my setup basically. So I'm going to go to M15 now. So I already have a narrative of what I'm looking for. I've got a bias, and the only thing I'm looking for now is the entry. So New York session started. We already had our setup just before New York opened. So I was early in this trade. I entered right here after the retest was confirmed. I also had a bearish engulfing on M15. So I took the trade. I put my stop loss above that last high or the London session high. The price trickled down, almost got to TP, retraced to break even, came back, almost took me out. So sometimes if you set and forget, price will eventually either hit your stop loss or it will hit your TP. So in this particular example, price eventually went and hit our TP. So I'm just going to quickly go through the day's results so that you guys can see. So I'm going to share the whole screen. Um, stop. Go. It's actually here. Okay, we're going to go to our results. Okay, so the first things first, once we see it set up, if on charts, I usually love to share it with the community. So we've got a WhatsApp community. This is not a signal group, like I always say. This is where we just share our views. So you can see this was the trade in my EU view for now. 1:2 RR. You can see where I entered just before New York session. The setup is a bit more visible right here. So you can see this was my M15, my entry. So this was a setup within that main setup I had, or that main trade idea I had, and took the trade. Then this is the end result of the trade, hit TP. Then let me see if this is going to play. I wanted to do a recording of my screen, but I didn't capture what I actually wanted to capture. But you see the open positions and you see them close, right? They just close. You can see there's the close. This was the entry. And this was just the trade closing right there. I couldn't show the running profits on the bottom because when I came to the charts, it was just happening a bit fast. But this is what I managed to capture. So that was the trade on EU. We took a 1 to 2 and simple price action, just using the 200 EMA to get a trend, get a bias of what's going on. Then waiting for confluence, which is the candle. Waiting for confluence, which is an order block broken. We got a retest of that broken order block. This was at London. This was at New York. So we got both London and New York retesting the same order block, and price played out, and we took profits on yesterday's low. So this is what I thought I should share with you guys. But otherwise, you can use this on any asset you trade. If you're trading indices, if you're trading crypto, it's more or less the same thing. So if you notice, okay, this is the crypto chart. Okay, from the time we crossed over and came above the 200, I'm just going to pick what the current market price is showing us. So price pushed up. Each time we come close to the 200 EMA, that's when we start looking for confluences. What do we have to the left? Also, you can use these moving averages together. You can use, for example, like I do, I use the 200, I use the 50. So if you notice here, price started respecting the 50. So now this is the same thing. Same thing. If price is trading above all moving averages, it simply means it's an uptrend. So each time we come close to the main moving averages, we simply look for confluences. We want to look for candles showing us that price is actually rejecting on the moving average. For example, here the moving average was acting as a dynamic support. And once we get that confluence, we look for order blocks, broken order blocks, imbalances. All those confluences are TDI confirmations as well. Anything we get, anything we can use, we can actually use that and take the trade. Trading against the trend, I think that will be a session or a video for another day. But otherwise, this is what I just wanted to show you guys. So this is GJ. Again, if you notice, we're just looking for where the trend started. So again, this is one other note you need to just jot down. Moving averages only work. Let me just say EMAs. Moving averages only work when the markets are trending. That's when you can use a moving average, whether it's exponential, whether it's a simple. Others use SMAs, which is a simple moving average. That's just slightly different, but it's more or less the same thing. So if the market is trending in general, so before we put even the moving averages to confirm a trend, if you see your market trending, creating higher highs and higher lows, just know you'll be able to use your moving average to get those entries which you want. But if the market is in a range, if the market is choppy, you'll find out that the moving averages will usually be on the same place or right in the center of the price, and price will be coming on both sides of the moving averages. So let me see if I can locate a market which is going sideways. This wasn't too clean. An example would be something like this. What else has been going sideways lately? Okay, most things have been trending lately, so maybe somewhere here, if you notice when we were here, but this is just a space of 1.5 days. You can see whenever you see a moving average going in between price and price appearing going on both sides, just know that you cannot use the moving average for an entry until the market resumes trending, either trending down or trending up. That's when you can use moving averages. So I hope that helps and clears out most of the confusion in moving averages. So that's it for me today. If you guys got questions on moving averages, please do write in the comment section. Then if you need me to elaborate more, or maybe do more videos on moving averages, I can also do that. But apart from that, enjoy the rest of your day. Good trading.